One of the first things you learn in cryptocurrency is that if you don't hold the private keys to your crypto wallet, then you do not own the crypto in that wallet. Unfortunately, this is a lesson that many are learning the hard way as centralized crypto platforms and exchanges start to go bankrupt, and the latest one to bite the dust is Celsius. Today, I'm going to give you a bit of background about Celsius, explain what its bankruptcy means in simple terms, how the company plans to recover, and when its users could get their crypto back. Before we examine this train wreck, I need to protect my neck. If you think I'm a financial advisor, I'm afraid you're incorrect. This right here is a purely educational project. Please contact a financial advisor if your portfolio needs to be checked. Now, if this is your first time hanging out, my name is Guy and crypto is what this channel is all about. My mission is to create high-quality crypto content that you can't live without. Coins, tokens, news, and reviews are just a few of the topics I scout. So, if you want to free yourself from doubt, subscribe to the channel and give that notification bell a clout. That's all you need to know about me. Let's talk about Celsius's bankruptcy. Now, I've talked about Celsius a lot recently for obvious reasons, and if you want a bit of background on the company and the people behind it, then I'll leave links to some of my previous videos in the description of this one. You can check them out later. Before we go any further though, I briefly want to talk about Celsius's CEL token, which is, or rather was, used to earn higher interest rates on crypto savings and pay lower interest rates on crypto loans. Note that the CEL token was never sold to retail investors in the United States, nor was it available on US cryptocurrency exchanges. This will be relevant later. Now, like many crypto platforms, Celsius was known for offering high interest rates on crypto savings. Celsius achieved these high interest rates by doing anything it needed to behind the scenes to earn the yield it was promising to its users with users' crypto, and the company would keep the difference, if any. At its peak, Celsius claimed it had around 1.7 million users who had deposited more than $30 billion of coins and tokens onto its platform. This massive amount of crypto was earning an estimated $3 million in yield per day, which was paid out weekly, specifically on Mondays. Naturally, a portion of this massive yield was used to buy back and burn the CEL token, which would cause its price to go up over time. Although many critics had been warning for a long time that Celsius's business model was unsustainable, it wasn't until the crypto market crash in May that users started to listen closely to those critics, who by that point were claiming that Celsius had gone insolvent. For a while, it looked like Celsius was fine, but following a big deviation between the price of ETH and Lido Finance's ST-ETH token in early June, caused by selling of ST-ETH, it became clear that Celsius was in trouble, and on the 13th of June, Celsius paused all withdrawals indefinitely. You can find out how exactly Celsius ended up in this situation by watching our previous video about its collapse. That will be in the description. Anyways, after Celsius paused all withdrawals, many began counting down the days to Celsius's bankruptcy declaration. For a while, it again looked like Celsius was fine as the platform began paying back hundreds of millions of dollars in DeFi loans to reclaim billions in crypto collateral. And then, on the 13th of July, Celsius announced that it had officially filed for Chapter 11 bankruptcy, exactly 1 month after it had paused withdrawals, and exactly 1 week after Celsius competitor Voyager Digital filed for bankruptcy. On that note, you might have heard that Celsius and Voyager hired the same bankruptcy lawyers. While some have taken this as a sign that something significant is afoot, it can be simply explained by the fact that this particular law firm is the best that money can buy for crypto bankruptcy proceedings. You might also have heard that filing for Chapter 11 bankruptcy by both entities was a selfish move, as it gives them total control of the assets on their respective platforms. Now, besides the fact that this was already in the terms and conditions, any alternative route would have resulted in instant liquidation. In other words, if Celsius or Voyager had filed for any other kind of bankruptcy, the coins and tokens on their platforms would be immediately sold. This would not only mean that users have zero chance of getting their crypto back, but it would also certainly crash the crypto market. Not good. Now, as many crypto headlines reported, Celsius is around $1.2 billion in the hole. It has around $4.3 billion in assets and $5.5 billion in liabilities, i.e. debt. The thing is that Celsius claims its Cell token holdings are worth $600 million, and some would argue that these tokens are now worthless. Even if they aren't, it would be impossible for Celsius to sell so much Cell without crashing the price, especially during a crypto bear market. As such, it's safe to say that Celsius is closer to being $1.8 billion in the hole, but again, this is up for debate. What's more is that this barely scratches the surface of the chaos that was going on behind the scenes at Celsius as per the company's bankruptcy filing. In Section B of the introduction to the bankruptcy filing, Celsius admits that it was growing too quickly and was taking very big risks behind the scenes that repeatedly put it in and out of the hole, so to speak. Now, Celsius goes on to cite the crypto crash caused by Terra's implosion as a big factor in its bankruptcy, as well as the resulting FUD that began circulating on social media after Terra collapsed, leading to large amounts of user withdrawals. If you watched our video about Terra's collapse, you'll know that Celsius was actually one of the first entities to pull its money out of Terra's ecosystem when UST deviated from its peg, hence why Celsius wasn't directly affected by the death spiral that unfolded in the days that followed. Even so, Celsius admits in its bankruptcy filing that it had also deposited large amounts of customer crypto into platforms and protocols from which it could not immediately withdraw, which is why it paused user withdrawals in early June when the platform experienced a bank run. For what it's worth, Celsius confirmed in its bankruptcy filing that it's paid off all its DeFi debts and has therefore reclaimed control of its collateral. Ironically, this has apparently led to concerns that Celsius will eventually sell its massive ST-ETH position, which it had been using as collateral for DeFi loans. Now, you can learn more about ST-ETH and Lido Finance using the link in the description. Anyhow, later in the bankruptcy filing, Celsius gives more details about what caused the company to go bankrupt. It begins by acknowledging that the company lost around $70 million worth of ETH in the Stakehound hack last year. Now, this is peanuts compared to the more than $500 million in collateral Celsius gave to an unspecified company for a loan, which we now know to be Equities First, an investment firm based in the United States, which subsequently notified Celsius that it could not pay back the collateral when Celsius came to repay the loan it had taken out against said collateral. According to the filing, Equities First has been slowly paying Celsius back to the tune of $5 million a month since July, and according to the Financial Times, Equities First still has $440 million to pay back. Safe to say that is going to take some time. Now, after talking about the effects of the pandemic and the ongoing war in Ukraine, Celsius talks about how the Fed's interest rate hikes have been crushing all asset markets. The usual stuff. Regarding the crypto market, Celsius discusses Terra's collapse, how this likely led to the collapse of crypto hedge fund 3 Arrows Capital, which in turn led to Voyager Digital's bankruptcy, the depegging of Lido Finance's ST-ETH token, and the rumours about Celsius's insolvency that followed. What's interesting is that the end of Celsius's bankruptcy filing reveals the top 50 creditors of the crypto platform, many of whom are users. As you can hopefully see, the top 10 had deposited more than $15 million each, with the largest creditor being owed a whopping $81 million. Shortly after Celsius filed for bankruptcy, a bunch of crazy yet expected news started to come out, and the most memorable headlines were related to comments by Timothy Cradle, Celsius's former Director of Financial Crimes Compliance, who decided to speak out after the bankruptcy filing. Timothy told CNBC that Celsius's bankruptcy was fundamentally caused by the fact that they weren't managing their risks properly and they weren't even allocating capital towards addressing these risks. Oddly enough, Timothy said that the company wasn't necessarily corrupt, just very poorly managed. Now, I say odd because Timothy also said that Celsius's real user count was much lower than what the company claimed, with the actual user count being closer to 300,000 and was only 1.7 million because of all the fake accounts that were inflating the figure. Obviously, that is not very transparent. Moreover, Timothy told CoinDesk that Celsius was allegedly manipulating the price of Cell to the upside, presumably when executives like CEO Alex Mashinsky wanted to cash out, and to the downside when the company was trying to reduce employee bonuses, which were of course paid in Cell. Now, it sounds like these bonuses were pretty significant because Timothy stated that he had received a bonus in Cell tokens which he had swapped for ETH and later had to pay back a portion of his bonus to Celsius for unspecified reasons. This seemingly small portion was worth close to $1 million. Now, this might have something to do with the fact that the average Celsius employee was apparently making $30,000 per month based on the company's bankruptcy filing. As if that wasn't crazy enough, Celsius is also estimated to have spent $350 million buying back and burning Cell, about the same amount that it's estimated to have lost through leveraged trading with its users' crypto. Another former Celsius employee told CNBC that the company was not conducting background checks on new hires and that she was explicitly told not to run a background check on Celsius's former chief financial officer, who was subsequently arrested for connections to money laundering in Israel. She also echoed Timothy's opinion that the company was not corrupt but simply growing too quickly, and noted that Celsius employees have their money stuck on the platform too. Ouch. This is why it's important to keep any crypto you're not actively selling or trading in your own personal crypto wallet, and you can find out what the best ones are using the link in the description. Anywho, by this point, what everyone was waiting for was what the next step for Celsius would be, and this was revealed during Celsius's first bankruptcy hearing, which took place on the 18th of July. Now, unfortunately, any video, audio, or transcript of the first hearing is unavailable because it's illegal to record court proceedings like these in the United States. Fortunately, it's possible to watch Celsius's bankruptcy hearings in real time remotely via Zoom as they happen, and many Celsius users provided summaries of what went down during the first hearing. The tip of the spear in this regard has been Simon Dixon, a long-time crypto holder, investor, author, and founder of Bank to the Future, a crypto-focused investment platform. Shortly after Celsius's first bankruptcy hearing, Simon organized a Twitter Spaces call with other Celsius users and stakeholders to discuss what went down, and I'll leave a link to the full discussion in the description, since I'll just be giving you a quick summary of the main takeaways for the sake of time. First and foremost, it's possible that US regulators could crack down on the Cell token due to how it was being used by Celsius. As I mentioned earlier, however, the fact that the Cell ICO wasn't available to retail investors in the US and wasn't available on US exchanges leads me to believe that this probably won't happen. Second, the judge presiding over the bankruptcy case is apparently upset with Celsius's lack of transparency, which, given the circumstances, is completely understandable. Third, it seems that Celsius was holding some of its users' assets in its corporate wallets, something that's a big no-no as far as US regulators are concerned. Fourth, Celsius is planning to use its crypto mining operations to dig itself out of the hole, pun intended. Now, I'll come back to Celsius's recovery plan in just a moment. Fifth, a committee consisting of 7 to 9 Celsius users and stakeholders who were the most affected will be put together, and they will have a say in Celsius's recovery plan. As far as I understand, some of these users and stakeholders actually want Alex Mashinsky to stay on as CEO. And speaking of Alex, the sixth takeaway is that his claims that Celsius was making most of its money from lending crypto to institutions were revealed to be false, with the platform only lending out around $93 million of crypto to institutions, though it's not clear where this figure is from. Seventh, Alex will likely be forced to resign within the next few weeks because of how exaggerated his claims about Celsius were, claims which at some points were in direct contradiction to Celsius's own terms and conditions. It's possible he could be hit with criminal charges afterwards as well. And finally, Celsius's lawyers emphasized that social media rumors were the primary factor that caused the run on the crypto platform, and it's not entirely clear whether the company will go after any specific people to try and prove that point. Now, additional information about what went down during Celsius's first hearing can be found in an interview Simon did with fellow crypto YouTuber James from Invest Answers. I'll leave a link to that interview in the description too. The TLDR there is that it's likely the people who are chosen to be a part of the committee will put their interests first over those of the broader Celsius community, meaning the average Celsius user may find themselves at the back of the queue of whatever recovery plan is proposed. That said, Simon believes there are three possible outcomes. A settlement between Celsius and its users, which is unlikely. Celsius simply waits until the crypto market recovers to become solvent again, which is unlikely. And that users who want to cash out will be able to, and those who want a stake in whatever Celsius becomes will get a stake. It goes without saying that the third option is preferable, and if I understand correctly, Simon wants to work with other Celsius whales to restart the company from scratch once all is said and done, and do it the right way, starting with BTC only. To help the Celsius community through these trying times, Simon created a Telegram group about Celsius's bankruptcy, and I'll leave a link to the group along with a link to my video about the best crypto Telegram channels in the description. Now, if you're wondering what comes next, the answer is quite a bit. As I mentioned a few moments ago, Celsius is planning to use its crypto mining operations to recoup its losses and pay back its users. There are just two problems with that plan. First, Celsius apparently needs $5 million more to get its mining operations up and running, money that it needs to pay for things like import fees and other such expenses, and money which it's not likely to get. Second, and more importantly, crypto mining requires a lot of investment and lots of cash flow, and Celsius has neither of the two because it's literally bankrupt. Never mind the fact that if the crypto market continues to crash, then crypto mining could become unprofitable. More about what that could mean for BTC using the link in the description. I digress. The capital intensity of crypto mining is something that Simon Dixon pointed out, and why he believes it's more than likely that the committee of Celsius creditors will push the company to go down a different route. This ties into the second hearing, which is scheduled to take place on Monday, the 8th of August, and whereas the first hearing focused on Celsius the company, the second hearing will focus on Celsius the community. By that point, the Celsius Creditor Committee will be set up, and they will give their side of the story. Based on the aforementioned Twitter Spaces call, Celsius's creditors will likely say they were misled by the company and demand full transparency, even down to specific cryptocurrency transactions. Based on this Chapter 11 bankruptcy timeline from Xclaim, Celsius will then have up to 6 months to present a detailed recovery plan to the Celsius Creditor Committee, after which the company and committee will go back and forth for up to another 6 months. Once both parties have come to an agreement and the plan has been approved by the court, Celsius users should start to get some of their crypto back in the months that follow. But the infographic notes that repayments could take as long as 2 years to complete. All in all, it could take up to 4 years before all Celsius users get some, or hopefully all, their crypto back. But I must stress that this is on the longer end. If everything goes smoothly, Celsius's bankruptcy case could be resolved and repayments could be made in as little as 2 years, which is still quite a while. Still, it's possible that the recovery plan put forward by the committee includes some way for Celsius users to exit early in exchange for cash, likely at a discount. Not only that, but it's possible that an institutional investor of some kind will come along and offer to buy the claims the Celsius users have on their locked crypto, likely at an even bigger discount. If you ask me, this second possibility is more than likely to happen, as we've already seen FTX offer an early exit to Voyager Digital's users following its bankruptcy. But let's just say the terms and conditions for that deal were less than ideal. In sum, then, there is a long road ahead for Celsius and its users. But so long as both parties continue to cooperate, the road will be a lot shorter and a lot less painful. If you want to keep up with all the updates and read letters from other Celsius users who are affected, I will leave a link in the description. And that is all for today's video about Celsius's bankruptcy and what comes next. If you found it helpful, help me out by hitting that like button. Consider subscribing to the channel too and ping that notification bell to make sure my next video finds its way to you. In the meantime, you can check out Coin Bureau clips for more crypto flicks or tune into the Coin Bureau podcast to get quality crypto knowledge that will last. You can also follow me on Twitter, TikTok and Instagram and join my Telegram. Don't worry, there's no spam. There's also no spam in my weekly newsletter, just a detailed breakdown of my portfolio and a bunch of tips and tricks about how you can make yours better. As you can see, we don't run ads, and that's because we prefer to run fads. Head on over to the Coin Bureau merch store and get something for yourself, your mum, or your dad. You can find your way there and to all the other resources I mentioned using the link in the description. Thank you all so much for watching, and I'll see you in the next one. This is Guy bidding you goodbye.